afternoon, investor and INDORAMA Ventures Public Company Limited. The Stock Exchange of Thailand welcome you all to the SET Digital Roadshow Year-End Performance of 2020. The session will run about 45 minutes, including Q&A. Presenting company will start the session by 30 minutes presentation, followed by 15 minutes Q&A. During Q&A, investor may leave your questions in the meeting room chat box or use raise hand function. Then presenting company will open your microphone so you can ask the questions to the company directly. May I now invite INDORAMA Ventures Public Company Limited to start the presentation, please.
Thank you, Stock Exchange of Thailand, for organizing this for us, and welcome to all investors. I hope you all are safe and fine. So the format is the investor presentation. So we'll give, let's say, about 15-20 minutes presentation, and then we go to a Q&A. So if you have any questions during the presentation, please feel free and send your questions to the chat box. And over to you, Aradhana. Thank you.
Thank you, Vikas, and thank you everyone for joining us today. So to start off with, we'll just go through, we'll give you an overview again of our company, what 2020 looked like for us, and an outlook of what we see over the next few years. So if we look back on 2020, overall in hindsight, we come out of the year with definitely a challenging year, but we also come out with what we call renewed confidence. And when we say that, we mean that we know today we have a portfolio of businesses that is resilient. It's been able to manage through the crisis well. It's sustainable, and it's positioned for growth. We have strong leadership teams that have been able to navigate the crisis and the pandemic well. And today we have the right people with the right experience in the right places. And we are also spending a lot of time and energy in putting together the right systems and codifying best practices to improve on our efficiency and our excellence. So that really explains our platform, our people, and our systems. And this year, what we also spent, or in 2020, what we also spent a lot of time doing is really focusing on the people side as well. And what we did was we took a look at our organization structure and reorganized a bit. So today what we have is one global CEO, Mr. D.K. Agarwal, that oversees three business segments, and you can see them here: IOD, Combined PET, and Fibers. And within each business segment, we have a COO. We have Mr. Chris Keneally, who now is the CEO for the Fibers division, who joined us just this year. And Alistair Port, who is the CEO for our IOD business, and he joined us with the Huntsman acquisition in beginning of 2020. So we now have three strong verticals, each with strong leadership teams, and within that we have 16 businesses. So again, in this slide you can see a snapshot of those three businesses, and we primarily started off as a PET and polyester fiber company, but over the years we've systematically and gradually grown the business. So we backward integrated into PTA to secure feedstock and increase our cost advantage. We went forward into packaging, which today is a small but profitable business for us and one area for growth. We also went into recycling to build a circular ecosystem for PET, given the sustainable, unique sustainable components that PET has. We also backward integrated into MEG, which opened up the IOD segment for us in 2012. And as I mentioned, in 2020, we had our largest acquisition called Spindletop, which further diversified the IOD platform for us. So we went into also higher value-added products such as LAB and surfactants and oxyfuel. And then our fiber segment is broken up into three key verticals: lifestyle, hygiene, and mobility. So today what we have is a global footprint. We're in 33 countries. We're vertically integrated. We have a diversified portfolio, but with strong links with each one another. And most importantly, also, we have a platform for growth. And each of these three business segments have strong growth potential. So when we look at 2020, we definitely had some challenges. So if I start off on the right-hand side, what could have gone better? With the pandemic, we saw a massive drop in worldwide demand for polyester fibers, a 9% drop from 2019. And this resulted in a major contraction in paraxylene, PTA, and MEG spreads, as well as a decline in the demand for our lifestyle fibers vertical. We have, however, started seeing strong recovery since fourth quarter and continuing well into 2021 as well. Also with the pandemic, we saw last year a drop in the crude oil price, and this declined our shale gas advantage, which specifically hurt our MTBE and MEG businesses. We produce these products in the US with an ethane-based feedstock. So the drop in the crude significantly impacted our spreads here. As you know, we have seen tremendous improvement in the crude oil price, and with that, the rise in our shale gas advantage with it. We also, unfortunately, were hit by a series of natural calamities in the US, which significantly impacted our IOD operations. We were hit by a couple of hurricanes in 2020, as well as a lightning strike on our gas cracker. And then, as you know, the polar vortex at the beginning of this year as well. Despite these challenges, however, we did have a record sales volume in 2020, 18% over 2019. This includes the acquisition of Spindletop. So if you remove that from the equation, then we saw a 5% increase in sales volume over 2019. And this primarily came from PET as well as hygiene fibers. PET saw strong demand coming from home consumption and medical applications, as well as new applications such as sanitizers and face shields. However, we did lose demand from on-the-go packaging, on-the-go consumption because of the lockdowns. On the hygiene fiber side, we saw strong volumes, again, from the crisis through COVID-related demand for masks, wipes, and PPE. Our recycling business is also on target. We made 4 acquisitions or 4 investments in the recycling, PET recycling space in 2020, and we're seeing strong demand continuing in this front. We also made a lot of efforts towards various transformation projects in 2020. So we launched what we call Project Olympus, which is a company-wide cost transformation program. And in 2020, we were very proud to say that we delivered 21% ahead of target. And I'll explain a little bit more detail on this on a later slide. What we also did is we embarked on a journey of one ERP, S/4HANA system, that this is going to take a couple of years to implement, but in 2020, we completed the design phase, and you know, given the crisis and that, you know, things had to move virtual, we were debating whether we should delay the launch of ERP, but we decided to carry on and continue, and our teams have made considerable progress and have managed the complexities of working virtually very well. So we're very proud of the ERP team for the way that they've handled the crisis. And moving on to the next slide, I mentioned that we had a record sales volume in 2020, and the outlook for each of our 3 businesses looks positive in 2020 as well. For combined PET, we should see higher demand coming from, as you know, vaccines are rolled out and lockdowns are eased. We should see on-the-go consumption coming back, and we should also see replenishment of pipeline inventory. On the IOD side, with the improvement in the crude price, as well as demand picking up for our MEG and MTBE businesses, we will see volume improvement here as well. And on the fiber side, we were impacted specifically in our lifestyle vertical, fibers vertical, and our mobility fibers vertical. However, since Q4 of 2020, we have seen strong recovery in these 2 spaces and looking good carrying into 2021 as well. And on the next slide here, the biggest thing that we took away from 2020 is that we have a portfolio of businesses that really saw no structural damage to the industries that we serve and the end markets that we serve. Each of our products have had strong recovery and have strong growth outlooks going forward. So we're very happy with the portfolio and platform of businesses that we have grown over the years. On the next slide, if I move specifically to PET, when you compare it to it really competes with aluminum cans and glass bottles in terms of packaging. And PET remains as a preferred polymer due to its low cost per serving as compared to aluminum cans and glass bottles, as well as a lower carbon footprint and as compared to aluminum cans and glass bottles. PET has unique properties such as its resealability, its recyclability, and these continue to be an advantage for the polymer. PET also has quite a low recycling rate, and you can see that on the right-hand side. This 53% number is a global rate. However, it differs across regions. So in the US, we have about a third. We see a 30% collection rate. In Europe, about 50%. Whereas in Asia, considerably higher at about 90%. And this is due to the difference in manual labor that is used across the different regions. And with manual labor, you're able to sort better, and so you get better collection rates and quality as well. But what we saw in 2020 is that we've still had very good engagement with our customers. We are seeing that the brand owners are fully committed to PET and to recycled content and are pushing us to continue to invest in recycling initiatives. So recycling will continue to be a very strong growth engine for IVL going forward. And on the next slide, for PET in general, you'll see here that on the left-hand chart that the demand for PET is really coming from emerging markets. So the opportunity here really is from emerging markets. With a population of 4 billion people, the PET per capita consumption is 2.5 kilograms, whereas in developed markets, it's 3.5 times that. So emerging markets really have a lot of headroom for growth in PET. And on the right-hand side, you'll see the green portion representing recycled PET, which is projected to have growth rates well above GDP at double digits. On the next slide, moving to our IOD business, we have a strong portfolio of products in our IOD business broken between commodities and HVA. And you'll see the HVA, the three bottom products, and on the right-hand side, you'll notice that they have remained quite consistent. Their contribution has remained quite consistent over the years and in 2020 as well. What really got hit was our commodity side, specifically MEG and MTBE. And if I go to the next slide, I'll just explain where we stand today with MEG. So MEG has made a strong recovery since the end of last year due to three key reasons. We are seeing supply tightness in the market. Inventory levels in China are at their lowest. We also the industry was also hit by a couple of turnarounds in the Middle East, as well as the polar vortex in the US, which shut down some capacities. So this combination of factors has led to supply tightness for MEG. At the same time, we are seeing strong recovery in demand, and this is really driven by the recovery in demand for polyester fibers globally, which is a major market for MEG. We've also seen a recovery in antifreeze demand, which is another application for MEG. And then finally, with the improvement in the crude oil price, we're seeing an improvement in our US shale gas advantage. Also, the pricing for MEG benchmark pricing is in China, and this is it's crude linked pricing. So So as crude improves, so does the price for MEG. And all these factors have resulted in a rebound in the MEG market over the last months. Moving on to fibers, I mentioned we have three key verticals here: mobility, lifestyle, and hygiene. And of course, these industries are quite different, but there is something that's common to all three of them, and that's really that all of these products play an important role in the end consumer's life, especially when it comes to safety and hygiene. And accordingly, our customers are looking for the highest quality that they can rely on, and this is what makes these businesses about long-term relationships and high value-added businesses. And on the next slide, you can see that we have strong expectations for growth for each of these three verticals. On the mobility side, light vehicle sales are expected to rebound to 2019 levels by 2023. And we also see that new vehicles tend to be equipped with higher safety measures, for example, a larger number of airbags within each vehicle. And so this proves well for our mobility vertical segment. On the lifestyle side, this is supported by growing affluence and urbanization. Also, there is no viable alternative for polyester when it comes to a combination of cost and performance. Natural fibers also have a very high sustainability impact. For example, cotton has a lot of water usage in its production, and they also have limits on their production. So these factors bode well for polyester when it comes to apparel. And on the hygiene side, population is growing in the low diaper penetration countries, which provides a lot of room for growth, while there's also a strong growth trend in developed markets for products in adult incontinence as a society ages. And then hygiene, of course, is also continuing to be benefited by the impacts of COVID, such as demand for wipes and masks. And specifically for the fibers business, innovation here plays a big role for us. And we do have some interesting innovations in the pipeline, and we continue to seek out partners in innovation, whether that be peers or customers or startups. We are looking for game-changing innovations that can really change the space. There are a lot of new technologies out there, and we remain open and ready to capture on these opportunities. And then moving to ESG, IVL is making good progress on the ESG front, and over the last year and a half, we've secured cumulatively about $1 billion in ESG financing, and this includes Thailand's largest blue loan that we were given end of last year through an IFC-led consortium. And the fact that international institutions such as IFC are recognizing IVL's serious intention and commitment is a big testament for us and our sustainability initiatives. And you'll see on the right-hand side also some of our targets that we've communicated. Today, we have a recycling capacity of about 270,000 tons, with an ambition to achieve 750,000 tons by 2025. And we've committed to an investment in recycling and sustainability initiatives of $1.5 billion by 2025. So this is really a space that we're serious about. And as I mentioned, in 2020, we've made 4 investments in recycling. And then on the next slide, I had mentioned at the beginning that we embarked on what we call Project Olympus. And what Project Olympus is a company-wide transformation and asset full potential program. So we have a target of achieving $610 million in savings by 2023. And these are this is initiatives. The savings is made up of over 2,000 initiatives that runs across our 3 business segments: IOD, fibers, and combined PET. across different regions, across different levers such as operational excellence, procurement, sales, strategic footprint, and it really is the number that you see here, 610, is by no means a top-down number, but this was really very much driven by the businesses, by the sites. And along with our company, they worked with some world-class consultants, and you can see their names here on the slide, Deloitte, Accenture, BCG, to really rigor test and validate these initiatives. And as I mentioned, in 2020, we achieved 21% of target, 21% ahead of target, saving $92 million. And in 2021, we expect about $200 million in savings. And then finally, the last slide, this is our snapshot up until 2023. We are projecting EBITDA of $2.3 to $2.4 billion with a ROCE between 14 and 16%. And this is coming primarily for three key initiatives. Firstly, Project Olympus, as I mentioned. Secondly, organic volume growth through a combination of expanding capacity and increasing utilization of our assets. And then finally, successful completion and integration of our major projects, such as Spindletop, the acquisition we did in 2020, our Lake Charles gas cracker, as well as our recycling initiatives. And that we do have also further upside potential from adjacency growth, which is currently not built into this presentation at the moment. So with that, let me open it up to specific questions. Thank you.
If people has any question, you can send the question through the chat box or use raise hand function.
Okay. There's a question from Kanan Konbo. So yes, for the TRIS rating, we are rated AA minus, and they did not down the outlook to negative. Actually, they downgrade to stable. And this year, basically, for the last few quarters, we are cash flow positive. And what we expect this year, like the first half, we have a very strong visibility, and we are fully sold out on the materials like PET and also PTA and different products. The demand is very good, very strong. The consumption is very good, like in every market. And also, the pipeline inventory is very dry because last year the prices were coming down. So there was a lot of inventory eat up by the customers. So this year we have seen the double demand also from the inventory and consumption. So as I mentioned, the volumes have improved significantly, and we expect to be free cash flow positive. So on the matrices, what the TRIS look at, we expect to perform much better based on the outlook that we have today. And yes, definitely, we should perform better on the TRIS matrices. So another question on the capex. So let's go to the capex slide. So there's a slide on the capex. So let me give you a view when I talk about the free cash flow also. So you can see here, we have already given out our guidance for next few years, 21, 22, and 23. So we expect to create an operating cash flow of $5.8 billion. And there's a maintenance capex of 900 million, some financing costs. So there will be a free cash flow positive, $4.2 billion. And this will be deployed in three priorities. So we reduced the net debt by $2 billion. We pay the dividends, maintain our dividend policy, and strategic investments. So we have three major investments. You can see three major buckets. So one is on the recycling business. So as you know, we are the very large PET producer, in fact, the largest PET, and we are also the very large PET recycler to provide solution to our customers. And we are growing this business every year. So last year also we grew this recycling business, and we are going to grow this business even more, even this year and going forward. Another major project is Project Olympus, our transformation projects. Aradhana mentioned we are going to save around $600 million in 4 years' time, 20 to 23 in 4 years. And then certain other growth projects. So, like a specific question on the emission, to reduce the emission by 10%. So, yes, so that's our target for 2025 on the GHG emission and carbon emission. So the capex, yes, there would be some requirement to spend on the renewables. So what we have said is that we'll be spending $1.5 billion in the entire sustainability program, which include the recycling business and also the capex required for the renewables, and also some to replace some of the energy. So there are many projects which are identified. So some of these projects are, let's say, without any capex, some are with some small capex. So we have not given out those figures, but like the entire sustainability and recycling is about $1.5 billion in 5 years, from 2020 to 2025. Then there's a question on the outlook on chemical spreads such as MEG as economies reopen and plants restart. So on this question, I would request my colleague Boribun, if you can give an outlook on IOD segment, please.
Hello. Yeah, can we first go to the MEG slide, the backup MEG slide? So in terms of MEG, what we saw was that there's been some tightness in the MEG market during the first quarter this year. So you can see that the China short tank inventory has declined to the lowest level in 12 months, following unplanned shutdowns in the US and heavy plant turnaround schedules in the Middle East. So we now have MEG inventory at a level where I think it's very much in control, or at a low level. We look at on the demand side, in 2020, we had demand impacted by polyester fiber demand shrinking because of COVID lockdown, the high street or the main street demand going away. What we see in 2021 this year is we expect the demand to be significantly higher than the level last year. And when we look at the next impact, which is the crude oil price and our shale gas advantage, we make MEG in the US Gulf Coast based on shale gas, whereas the rest of the world makes MEG mainly from naphtha feedstock. And you can see that the right-hand chart shows that when crude oil price collapsed in second quarter of 2020, our US shale gas advantage shrank from what was average at $190 per ton average in 2019 down to $56 per ton in that second quarter. Now, since then, the shale gas advantage has recovered very well. By February, it was at by the end of February, it was at over $200 level. So it was back at 2019 level. So we've seen good recovery on the MEG front, along with the crude oil price. Do we have a slide on MTBE? Next one. Okay, maybe it's not there. Okay, here's MTBE. So MTBE, it's a MTBE is another commodity that's widely used in the world. Now, the majority of MTBE demand, or 50% of MTBE demand and production, is in China, where the production is again using crude oil or naphtha as raw material. So what we saw in 2020 was, again, the collapse of crude oil price and the decline in U.S. shale gas advantage, and that's where we saw our MTBE spreads and price drop significantly. Since then, you've seen there's been a good recovery in crude oil price. MTBE price has also recovered. During the first quarter of this year, in winter, typically butane, which is our feedstock, butane demand is strong. So you have a relatively high butane price. So our margin may have not recovered fully in the first quarter, but that margin should recover more strongly as we go further into the year, when we go into the low season demand for butane during the summer months. So in the summer months, we should see improved feedstock pricing for our butane, which is a key raw material for our MTBE.
Thank you. So also on the other products, so our company today is 50% company is into PET and other polymers like PTA, the raw material, and 30% is into IOD, which is MTBE, MEG, and the very fixed margin surfactants business, and 20% is fibers. And fibers is also majority of the fiber is fixed margin business. So on the other businesses, like within these three segments, there are 16 businesses we have, and on all the 16 businesses, we have seen a good pickup starting from December last year and continuing in the first quarter and second quarter. We have seen that if you talk about the majority, the 50% of the business of PET, PTA, consumption has improved, and also the new supplies on PET is very, very small, and demand is very good. So we have seen the spreads have improved. And I'm also taking a second question where you're asking guidance for next 2 years. So PET is the on-the-go product. And on-the-go product, it means that when you have more people moving around, they're in malls, they're in sporting events, other events, then the consumption is more at the airports. So we have seen the good pickup, but still there's an appetite to improve. And next year, when the vaccine rollout will be more complete, we expect a more mobility for next of the people next year. Because when the people stay home, they consume more glass, or in the restaurants, they consume more glass or aluminium, but PET is on the go. So this is where we see the demands to improve further, and we will benefit from that. So that's on the side of PET, and our recycling volumes are increasing. And recycling business is now cost plus. So that is also going to help. On the IOD segment, which is 30% of the company, Borupun explained on the MEG and MTBE. So there's some component which is a fixed margin business. Almost, I would say, around 50-60% is fixed margin downstream businesses. So that is doing fine. And on the fibers, we have three businesses: the automotive, the mobility fiber, and the lifestyle fiber. So they were a big laggard last year. And since December, we have seen good pickup in mobility. The vehicle sales have started to move up. These are fixed margin businesses, but we lost volumes last year. So those volumes are improving. So if you're asking a specific EBITDA per ton guidance, I would say that, well, let's go to the EBITDA slide that we have given for 2023. So here you can see 2019 was $1.15 billion EBITDA. 2020 is very similar. It's about 3% lower than 2019. So 2020, even though there was a crude oil price decline, we lost some volumes, we had natural calamities, but still we were down about 3% because we added a lot of volumes from spin to top. So this we see growing almost 2.3, $2.4 billion. So it's almost doubling in 3 years. And this 3 years doubling is more or less, I would say, if I say kind of split more evenly. So you will see a good pickup this year. So far the things are looking very good. And then next year and the year after. So a lot is coming from Project Olympus and the spindle top, which has not performed last year to its potential. And the premium that you see, the industry spread is lost about $220 million. If I put it on the today's margin, the current margin, it is positive. So industry has recovered quite significantly. So I hope it helps. Yeah. Yeah, so I would request my colleague Boribun to talk about this acquisition issue, that what are the other acquisitions slowing down. But let me give you on a brief the appetite of the company. So let's go to the cash flow slide. So in this cash flow slide, you can see that we'll be creating a free cash flow of over $4 billion next few years, like 3 years, this year and next 2 years. And we have identified capex of $1.5 billion, which is Project Olympus and recycling and other businesses. Like we're expanding in India. It is a growing market, so we're expanding fibers, we're expanding PET. Just existing sites, we're expanding. But we have a net debt reduction of $2 billion, which means that if you take debt equity at 1:1, so there's a headroom of about $4 billion. And we are a growth company, so we have said that we will not do any major acquisitions for about 15 to 18 months since we acquired Spindle Top earlier. But we have we are eventually we are a growth company, but there's nothing in the pipeline big at this point. And maybe Boribun can help us to understand what are the major areas, strategic areas which are interesting to us in the future.
Yeah. So can we go to the slide where we have our different value chains? Yeah, we have portfolio. Yep, there we are. Okay, good. Just to come back on your question, right, in terms of slowing down on acquisitions, you know that over the last 12 months, we have not undertaken any major acquisition, which is what we said when we closed on the Spindletop acquisition in January 2020. We said that it would take a 12 to 15 months pause, and we've done that. And also in 2020, we were very much focused on Project Olympus, which is what you're saying, you know, is the company-wide cost optimization and ERP harmonization, right? Exactly that. So we spend a lot of our efforts doing that, and that it's still a lot of our efforts because we're looking to unlock $600 million in this Project Olympus program. In terms of our opportunities, you can see that we have 16 different business verticals now. You know, IVL growing from a company that was initially mainly in PET and polyester fiber. You know, we now have businesses across different value chains. So you look at our PET, yes, we have PET, we have packaging, we have recycling. In fibers, we have our lifestyle fiber, which is polyester fiber. We have our hygiene fiber, which is both polypropylene fiber, and then we have mobility. You know, the tire cords, the airbags. So these are different fiber businesses. From the IOD side, we have both our raw material integration, the MEG, that goes into PET, as well as we have surfactants, your laundry detergents, your washing up liquids, as well as PO and oxyfuel for PO and MTBE. So PO is the material that goes into seat cushions, and oxyfuel is the gasoline additives. Now, I think what I would like to say is that we find all these businesses good and complementary for us. What are we looking for when we look at our businesses going forward? We want to ensure that whatever business we acquire going forward is complementary to our portfolio, and helps us achieve a number of areas, right? So in terms of earning visibility, in terms of HVA, in terms of ESG, those are all very key components for us when we look at new acquisitions.
Also, can I just add here that, as you know, in the past, we've been a growth company, and a majority of that growth has come from M&A. And going forward, we will continue to be a growth company, but the balance between M&A and organic growth will be more equal now going forward. You'll see growth coming from both areas.
Yeah, absolutely.
We have 2 more minutes for Q&A.
While we are waiting for the question, I would like to take this opportunity to thank DBS for arranging this with SET, and also Kondora. Thank you very much.
Yeah, thank you very much for joining us as well. We got one more question in chat box. Wait a minute.
Yeah, so there's a question here. It's that do we see any risk of cost increase on U.S. shale from Biden administration? Bourbon.
No, not really. I mean, if we look at the U.S. shale cost throughout 2020, when we've had impacts in terms of crude oil price, right, declining. So you'd have thought that logically crude oil price declining would have had an impact on the shale production and shale price. I think we've seen that shale price has been very resilient. We had very stable, low cost shale gas because there's just an abundant available supply for shale throughout that period. And I don't think the administration is going to reduce that supply going forward.
If there are no further questions, I think the session has come to an end. The Stock Exchange of Thailand would like to thank you, investor, and INDORAMA Ventures Public Company Limited for joining us. We look forward to welcome you all again in the next quarter. Thank you very much ค่ะ ขอบคุณค่ะ
Thank you.
สวัสดีครับ